Hello and welcome to another video from Computershare about individual investors and direct registration. I'm Joe Williams and I'm joined again by my colleague Paul Conn, President Global Capital Markets at Computershare. Paul, how are you?
I'm good, thanks Joe. Thanks for having me on again.
Great. So it's been a while since we did a video on this subject and it looks like there are some new questions floating around online that we'd like to talk through. Perhaps before we get started though, I should just remind viewers that the information we discuss here is not legal or financial advice.
Yeah, thanks for that reminder, Joe. As ever, there's a very lively debate in various forums at the moment, particularly on Reddit and on X around direct registration and specifically about some of the more technical elements of how direct registration works in the broader market system, which is, mostly great to see. We're as keen as ever to keep engaging with investors and helping where we can.
But we've seen a few more troubling posts of late too.
We have, unfortunately, there's been some quite specific allegations made against Computershare recently in recent weeks, and they stand out, really significantly from other very well-informed commentary.
Okay, so before we move on to the questions, let's just address this directly so there's no ambiguity. Is any of the information or data that we've provided on direct registration or related subjects misleading, incomplete, or otherwise flawed, deliberately or otherwise?
No. The share position data we provide to our clients is completely accurate. We've also answered questions thoroughly and thoughtfully and truthfully, and we continue to stand behind the information we've shared via our FAQs and through these various AMAs. Nothing's changed.
Okay, thanks, Paul. So look, perhaps just useful to remind ourselves, what is it exactly we're trying to achieve here?
It's a good question, Joe. First and foremost, our role in the market is that of a provider of services to our corporate issuers and their shareholders. We have absolutely no interest in hiding things from them or from doing things that are not in their interest. We're a regulated business in the marketplace, and it's worth noting that we're regulated by the SEC, the OCC, and we also have to follow the rules of the exchanges and, of course, of the DTC itself. We exist to service the issuer clients we have and their investors, and we believe in transparency and appreciate the opportunity to talk about our role in the overall market system. Over the last couple of years, we've tried really hard to demystify the process by publishing FAQs and by producing animated videos to show them how the market works, especially from a settlement and registration perspective, and including the broad interactions between the different stakeholders and where we fit into it all. The allegation that Computershare is somehow misreporting data to its clients was disappointing, to say the least. And despite it not being deleted or any of the facts being provided, the expectation was that we'd answer a raft of questions about it. No facts have been provided that have any relevance to Computershare whatsoever.
Okay, so look, is there any truth to the idea that Computershare is engaging in dishonest reporting practices or somehow cooking the books when reporting data about the take-up of direct registration?
No, there isn't. And no evidence has been provided, just a list of questions for us to answer, which is, really the most frustrating point of this whole exercise. The offensive post has not been deleted. Instead, we've been asked lots of questions. While we're keen to engage with the investor community, no company is going to sit back and simply stand by and engage politely every time untrue and unsubstantiated accusations are made about them. And I really hope this is the first and last time we come across this type of situation. And I really do hope people think twice before making serious allegations in these forums.
Okay, thanks, Paul. Do you think we've been taking too long to answer the questions that have come through?
No, I don't. I really don't. But the first is we can't just drop everything when people have an interest in a particular range of issues and submit 52 questions for us. And the group was, kind enough to cut it down to, a much shorter list. But that shorter list only came into us, I think it was the 22nd of April, whereas the outside world thinks we've been sitting on all of this for weeks and weeks and weeks, which, clearly isn't true. Materials are posted online when things are submitted to us. We don't submit our correspondence online. So I can see how people have, reached a false view of how long this thing has taken. But it really, in the grand scheme of things, it really hasn't taken that long. We've obviously taken some time to compile the answers to the FAQ, which will be published later today, and we've needed to socialize those internally to make sure they're all factually correct, just as we have all other responses that we put into the market. So I think we've handled this responsibly and in a reasonably timely manner, and particularly reasonably timely, given that none of this was any of our doing to start with. It was just an allegation that was made against Computershare that still has not been substantiated. But here we are, engaging around these particular questions.
Okay, thanks, Paul. Look, beyond these sorts of accusations, is there any reduced appetite at Computershare to engage in the conversation at all? Are we going to be doing less of this sort of stuff?
No, I'm hoping that this is a one-off and we'll put this behind us and we'll get back to answering questions about, topics that are meaningful to a large group of people that are based on, real facts and concerns.
Okay, thanks, Paul. Let's take a look at some of the questions, and let's first talk about GameStop specifically and its quarterly reporting of the direct registration shareholder related information. I should perhaps emphasize that our long-standing practice is, of course, not to discuss specific client matters, but in this case, it seems difficult to address the allegations and concerns without tying our commentary to this specific client, and we've spoken to GameStop to let them know about this. So, Paul, can you briefly summarize the broad context in which some of these questions were raised?
Sure, I'll try my best. My assessment, and it really is only my opinion, is that some GameStop investors appear to be frustrated that the number of shareholders and the aggregate number of shares they hold in either DRS or the DSPP format has in effect plateaued over the last 3 quarters. This seems to have caused some investors and commentators to speculate that the system is working against their interests, and the sentiment appears to be what led to the allegations of Computershare reporting incorrect figures to GameStop, which is, as I said earlier, completely untrue. Now, some investors are digging into the mechanics of various aspects of the overall market system, and we're not seeking to stop them from doing that, of course. However, they seem to be missing some of the basic principles in how the numbers are calculated. During the most recent 3 or 4 quarters, new direct registrations, or simply shares purchased, have not outpaced deregistrations or simply shares sold or transferred back into the street name environment. And as a result of this, the aggregate numbers, which are calculated on a net basis, has simply flatlined, broadly speaking. In fact, they may have gone backwards ever so slightly during this period of time. So it's easy to see how some investors might misread signals concerning the data if they only see one side of the equation. Obviously, we've seen a lot of people post their purple circles to celebrate their direct registration, but I'd say on the other hand, it's quite rare, particularly in this situation, for an investor to publicly post the fact that they had sold or transferred their shares for whatever reason, which is of course their right to transfer or sell. So the quality of crowdsourced information flow is quite one-sided, focused almost exclusively on the buys to the exclusion of the sells. And on the sell side, that I think involves a lot more guesswork and hunting around. So the crowdsourced process will never be as accurate as the actual books and records that we maintain for our company client. So Joe, getting right back to your specific point, we're very comfortable with the data that we report to GameStop, which in turn GameStop uses to inform their regulatory filings. These are accurate. Nobody at Computershare is cooking the books, and it's potentially damaging when someone falsely claims that we are.
Thanks, Paul. Now, I want to ask you specifically now about the so-called heat lamp theory. It's not a totally new idea, but it seems to have got a bit of traction in some quarters recently. What's your understanding of it? And indeed, is there any validity to it?
Thanks, Joe. It's a good question. I've spent some time reading some of the materials online and listening to some of the online commentary. And broadly, the theory seems to be based on the assumption that a portion of the shares that underpin the DSPP that we at Computershare hold via our broker in DTC, that those shares are being used to cover stock loans, which in turn are helping short sellers push down the price of GameStop shares. It's not clear to me exactly what's driving the theory. If it were true, it would be understandable why investors would be concerned. But in the context of GameStop, I can only imagine this is part of a theory that's being put forward to somehow rationalize why the aggregate number of shares in direct registered form has not increased in recent quarters and in fact has plateaued, as I mentioned earlier. Of course, none of this is in any way a substitute for the investors' concern that there may be more shares in broader circulation than have been validly issued, but that's a different issue. Is a much broader concern, and it's one that frankly we can't validate or debunk, to be honest with you. All we can do is focus on the shares that are recorded on the register, where 100% of the issued capital does actually reconcile. The shares that are held away from the register in the depository and in broker nominees are obviously recorded by other parties and regulated by others. That's not part of our books and records system. But anyway, back to the heat lamp theory. As we discussed earlier, I think it is completely unsupported by facts, and it in turn misrepresents what Computershare does and generally, what we do in this particular area. We don't make securities available for lending, not on the register or through that portion of the DSPP shares that are held through our broker partner. The theory, in my personal and professional opinion, is simply not true. It's not based on credible or robust analysis. It connects dots that have no association with one another, and it draws incorrect conclusions by seeking to tie what may or may not happen in one area of the overall market, in this case, the stock loan market, with Computershare's regulated activities in a completely different part, being our role as the transfer agent and DSPP provider. Some commentators are claiming that specific stock loan activity is made possible by Computershare with our knowledge or as a result of certain shares being held by our broker to cover this lending activity. This is, again, a false claim and simply not true. We have spoken about stock lending activities many times. Neither Computershare nor the brokers it engages lend out shares that are owned by shareholders holding shares via the DSPP. We do not lend shares that are directly registered in investors' names. We've covered this many times, and I hope this is the last we have to really say about this matter.
Thanks, Paul. Next question. A group of investors recently asked the SEC to clarify whether any investors' DSPP shares are held in DTC. The SEC published something on this in their recent bulletin, and that should be up on the screen now for viewers to see. Paul, you've read it too as well, of course. Can you tell us whether the SEC's bulletin accurately describes the structure and workings of GameStop's DSPP at Computershare?
Again, and look, the answer is mostly yes. However, we probably describe things a little differently at the operational level, as we've shared previously in our FAQs and other videos. And even in this video, we do maintain a portion of shares underpinning the plan via a broker in DTC. We've made it known that we typically hold between 10 and 20% of the shares that underpin the plan with a broker. Nothing has changed there. Investors' DSPP shares are directly registered in the name of the investor and held as a subclass or a subledger on the books of the issuer. Every day we reconcile the aggregate number of plan shares with the shares that are held that underpin the plan on the register or at Computershare's broker partner. That's done every day.
Okay, thanks, Paul. And can I just ask you specifically about the term non-investor shares, which we've seen mentioned a few times recently?
Yeah, look, honestly, I don't know what non-investor shares really means. In this context, I can only imagine it's a question which is trying to peel away the structure, which hopefully we've been very, very clear previously. And again, today, we do maintain a portion of underlying shares backing the DSPP with our broker. Typically, it's between 10 and 20% of the shares in the plan. So I'm not sure what this term means. It's not a term that we use in the transfer agent industry, and I'm just not familiar with it. So hopefully answering these other questions has dealt with that question at least indirectly, and apologies if it hasn't.
Thanks, Paul. So here's another one which says that they've noticed a growing interest among shareholders of particular companies in leveraging direct registration system and the registration process with transfer agents to safeguard their investments against short selling malpractices. Should this indeed be one of the primary considerations for investors when registering their shares with their transfer agent?
Yeah, thanks, Joe. Look, this may be a relevant consideration for investors generally. For some investors in certain companies, this obviously is their primary objective. The benefits will include safeguarding of the asset by maintaining it in the investor's own name and maintaining, of course, a direct relationship with the underlying issuer and all the benefits that flow from that, including improved times for receiving information from the company, things like proxy forms and meeting materials, etc.
Thanks, Paul. So next one, are all DSP or plan shares or direct stock shares on the subledger in the DTC Computershare account rather than being in a user account? They've asked for a yes or no answer on that one.
So the simple answer is no. However, there are two elements to the question here. So let's just, the yes or no response is a no. So the answer to the first part is an emphatic no. The answer to the second part, as I've said before, is that a portion of the shares, typically between 10 and 20% of the plan shares, are held at our broker. This is something, of course, we've addressed before, but it just needs to be repeated here again today for complete transparency and consistency. We're completely comfortable with the way we manage the plan, and hopefully investors will be as well, given the information we've provided through our FAQ and through these various AMAs. We've managed plans this way for well over a decade or so, and we're fine to sit with our regulators and take them through the operational processes should that in fact be necessary. Of course, I should note, as I've said before, investors may at any time withdraw their plan shares, these are the whole shares, not fractions, from the plan into pure DRS if they prefer. This can be done electronically, it's very efficient, and it's free. In our view, just to be really clear, the features of the plan are beneficial, not detrimental to investors.
Thanks, Paul. So here's another one we received. Our FAQs page says that Computershare determines the portion of shares held in DTC for operational efficiency. Is that percentage of aggregate DSPP shares determined through market conditions such as daily volume price? Also, how often is it calculated, and how can retail investors track what percentage of shares underpinning the plan of a given security are allocated for operational efficiency?
No, this feature has absolutely no relationship to market trading volumes or market conditions. The specific amount is determined by Computershare from time to time, and we can and we do true up the inventory that we split between the register and DTCC via our broker. We don't believe the issuer or the transfer agent or the plan administrator needs to disclose the portion of shares that are held in DTC via the broker participant, and not even in light of the recent allegations or the so-called heat lamp theory, both of which we believe have no merit. In our view, the features of the plan are beneficial and not detrimental to the interests of investors. As I mentioned a few moments ago, we've operated this way for well over a decade, and there's never been an issue from an issuer, a shareholder, or from a regulatory perspective. So we're not quite sure why we need to change things at this particular point.
Thank you, Paul. So the next one, how exactly does enrolling in the direct stock plan affect the title and classification of pure DRS shares within an investor's account? Are DRS shares considered to underpin the plan upon actions such as purchase, drip enrollment, or setting a limit sell order? And does this reclassification apply universally across all shares in the account or other investor center accounts controlled by the same individual?
So I think the basic answer is no. My sense is this question is somehow related again to the heat lamp theory. I read somewhere a suggestion that where an investor elects to enroll in a dividend reinvestment plan or a direct stock purchase plan, that all shares held by the investor, no matter what format they're held in, DRS or certificated form, that all those shares would then be brought within the plan. And then somehow this aggregate number would in turn inflate the number of shares that Computershare holds via its broker at DTC, which in turn would create greater supply to help other parties short sell the stock. So while all shares will be eligible for DRP, it is simply a fantasy to claim that all these shares then become available for lending. We don't lend shares, clear on that. The analysis is, in my view, quite misleading, and it's clearly agitating a number of investors as well as us as we try and reconcile the chatter in the marketplace with investors' legitimate concerns, with our role as a regulated service provider. So hopefully today we are creating some real clarity and debunking elements of this theory that are just factually flawed.
Thanks, Paul. Can you outline the chains of custody and ownership for pure DRS and DSPP shares enrolled in the direct stock plan? Please specify how names are recorded on the ledger in different holding scenarios.
Okay, thank you. So the first part is a very straightforward answer. There is no chain of custody for DRS, or what I've previously termed pure DRS. Investors shares in their own name directly. There is no intermediary. So hopefully we're all very, very clear on that. Computershare's role in this situation is solely as a transfer agent, i.e. as an agent of the issuer. For the DSPP shares, for the largest portion of the plan holding, typically 80 to 90% of the shares, they're held on the register in the main class, on the main ledger. So the chain of custody is CPU nominee, which is Dingo, to the investor. For the 10 to 20% of shares that we hold via our broker at DTC, the custody chain is CD and Co to the broker, to Computershare, to the investor. Notwithstanding this, all holding types are registered and held in the name of the investor in the subclass and reported to the underlying issuer.
Okay, thanks, Paul. Next one, who holds title for the DSPP shares held at the DTC for operational efficiency, and how is this entity reflected on the ledger?
So this is the interesting one. I think it's just the reverse of the question that I just responded to. Computershare holds a position with its broker. The broker has an account at DTC. DTC holds shares on the register through CD and Co. So that is the chain of custody in the reverse flow. Hopefully that answers the question.
Okay, thanks, Paul. One more then. This says that some of Computershare's online customer service representatives have stated that Dingo and Co is the nominee used for plan shares, but information online about Dingo and Co is sparse. Can you provide more information on Dingo and Co and their function, and how investors can find more information about Dingo and Co?
Okay, so Dingo and Co is a very simple nominee. It's a subsidiary of Computershare, so part of our group. It's a nominee that supports our activities as a transfer agent in our role offering services for issuer clients. It's used for holding shares and transacting in shares with direct stock purchase plans and dividend reinvestment plans. We use it for operational purposes. Dingo has no economic interest and no rights to the property it holds. It holds that for Computershare on behalf of underlying investors. So in other words, Dingo holds assets, but it doesn't own any of them. While Dingo and Co holds plan shares on the registers of Computershare issuer clients, the owners, the individual shareholders, are treated as the registered owners of the plan shares, which includes all their regular rights, like the rights to receive proxy voting and dividends, etc. Computershare maintains a subclass reflecting the list of owners, so that they can be available through Issuer Online to the corporate client of ours, and to Investor Center for the individual investors, so they can check their balances. As we've noted before, investors are freely able to transfer their shares between the plan and what I've called pure DRS. It can be done electronically and there's no cost to the investor.
Okay, so Paul, look, we're way over probably how long we intended this video to be, so we're going to leave it there. There's lots of information for people to mull over, and of course we're going to update our FAQs page as well.
Yeah, well, thanks for the opportunity to sit with you and to communicate this information through the Q&A to a very broad investor base. We know there's extreme interest in these particular issues, and look, I hope by engaging periodically that we can continue to gain and maintain the trust of a large number of individual investors who are involved in these specific market situations. We're certainly trusted by millions of investors around the world, and I hope that will apply to the group that's particularly interested in some of these features.
Thanks, Paul. So look, please do remember to check out our FAQs page for more information. You'll see the link for that after we're done here. That just leaves me to say thanks to Paul for your time again.
Thank you, Joe. Thanks for having me on. I hope this proved useful.
And thanks as ever to all of you for watching. So just a quick PS from us here. Since we recorded the video, another question has surfaced over the last few days, which we wanted to make sure we answered. So we've got back together for a little update. Paul, thanks for joining me again. I understand a number of orders were rejected by Computershare's broker recently. Can you just give us some insight into what happened there?
Sure. So thanks, Joe, and I'm glad we could get this point communicated as part of the AMA. So yesterday, Tuesday the 14th, there was a significant increase in the GameStop share price, and a number of orders were submitted by investors at prices which they expected to be above the market price. But in fact, as the market price moved so quickly, their limit orders were significantly away from the market, and so our broker rejected them on the basis that they were more than 30% below the market price. So whenever a limit order is submitted that is 30% or more below the market price, to protect investors, our broker is highly likely to reject those orders. In fact, yesterday we in turn rejected those orders back to the relevant investors. So really the message is for everyone just to check their executions or their rejections so that they can stay in complete control of their orders. And if they want to resubmit, they can resubmit those orders on another day. And it's really that simple. Just please check to make sure your business got done. If it didn't, take the appropriate action.
Well, thanks very much.
You're welcome. Thank you, Joe.